Ladies and gentlemen, good day and welcome to Skygold Limited Q3 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth Patel from Orient Capital. Thank you, and over to you, sir.
Thank you, Sagar. On behalf of Orient Capital, I welcome you all to Skygold Limited's Q3 FY25 and 9 months FY25 earnings conference call. From the management side, we have Mr. Mangesh Chauhan, Managing Director and Chief Financial Officer, Mr. Jayesh Sanghvi from the finance team, and Ms. Nikita Jain, Company Secretary. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded on exchanges and the company's website. I would like to mention a short disclaimer before we begin the call. This call may contain some of the forward-looking statements which are completely based upon our belief, opinion and expectations as of today. These statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. With this, now I hand over the call to Mr. Mangesh Chauhan. Over to you, sir.
Thank you, Parth. Good morning, everyone. Thank you for joining us today as we discuss our Q3 FY25 quarterly performance. In Q3, the company maintained its strong growth momentum, achieving its highest ever quarterly revenues and operating profits with year-on-year growth of 116.7% and 217% respectively. We continue to onboard new clients and expand our customer base as part of our vision to become one of the largest B2B gold jewelry manufacturers in our segment. This quarter, we successfully onboarded Aditya Birla Novel Jewels Indriya brand, marking a significant milestone that highlights our ability to cater large-scale premium projects. Additionally, we strengthened our presence among major jewelry retailers by partnering with CaratLane and P. N. Gadgil in the past quarter. The jewelry industry as a whole is witnessing aggressive expansion, with leading brands rapidly increasing their retail footprint to capture a larger share of organized market. Our existing clients have also expressed plans for aggressive expansion, further enforcing growth opportunities. Demand for wedding jewelry remains strong despite fluctuation in gold prices, with customers adapting to market changes. Skygold diversification into new jewelry segment has gained strong transaction this quarter, further strengthening our market presence. The expansion includes 18K natural diamond jewelry and lab-grown diamond jewelry. Both exports and domestic market remain key focus areas, and we enforce our distribution network in Singapore to drive export revenue growth. Additionally, we have announced plans to rebrand Skygold Limited as Skygold and Diamonds Limited. This rebranding reflects a strategic shift, highlighting the company's broader focus beyond gold to include diamond, lab-grown diamond and other precious stones, offering a more comprehensive view of our operations. We are pleased to announce an update on Skygold's credit rating from India Rating subsidiaries of Fitch globally, which has assigned an rating of A- stable rating to the company bank loans. The fund-based working capital limit and proposed fund-based working capital limit have been rated A- stable and A2 A2+. India's rating has based its assessment on Skygold significantly operation expansion driven by increased installed capacity, inorganic growth and along with effective working capital management. Rating is expected to reduce the company's cost of fund. Collateral requirements the impact may not be immediate. These structure improvements will strengthen the company's financial positions, leading to better negotiation terms and lower borrowing costs in the long term and improving ROC and ROE. This quarter, our monthly production volume averaged 447 kg, up significantly from 270 kg per month last year, marking a robust 66% growth year-on-year growth. Exports continue to make healthy contributions, with sales of reaching 71 crore, marking a 12% growth as compared to previous quarter. Now I will discuss our Q3 financial performance. The consolidated revenue for the quarter stood at 998 crore versus 460 crore in Q3 24, thus registering a growth of 160% on year-on-year basis. The gross margin was 7.3% as compared to 5.3% on Q3 24. EBITDA for the quarter was 57.3 crore compared to 18 crore, showing a growth of 217%. EBITDA margins of the quarter stood at 5.7% as compared to 3.9% in Q3 24, improved by 182 BPS on a year-on-year basis. PAT for the quarter stood at 36.5 crores as compared to 8.9 crores in Q3 24. PAT margins for the quarter stood at 3.7% as compared to 1.9% in Q3 24, hence improving 172 point basis on year-on-year basis. In moving to the 9-month FY25 financial performance, the consolidated revenue for 9 months stood at 2489 crore, 2489.8 crores versus 1232 crores in 9 months FY25, thus registering a growth of 102% on year-on-year basis. The gross margin was 6.8% as compared to 5.6% on 9 months FY24. EBITDA for 9 months FY24 was 133 crores compared to 151 crores, showing a growth of 156%. EBITDA margins for 9 months stood at 5.4% as compared to 4.2% in FY24, improving a 115 basis on a year-on basis. PAT margin for 9 months FY25 stood at 94 crore as compared to 26.9 crores in FY24. PAT margins for 9 months for FY25 stood at 3.8% as compared to 2.2% in 9 months FY24, hence improving by 161 BPS on a year-on-year basis. We have delivered a strong performance in first 9 months for the financial year and remain on track to achieve our annual revenue target of 3,300 crore, driven by new client acquisition, operation efficiencies, and enhanced management capability. To support our growth, we have strengthened the leadership team by bringing in industry veterans across key roles, including plant head, sales head, designers, to further propel the business forward. I now request the moderator to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Palash Kawale from Nuvama Wealth. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations on a great set of results. Sir, my first question is on volumes. So, what was the volume out of 447? What was the volume for the Skygold standalone entity?
Standalone for the 9 months it was 997 kgs and 975 kgs and 181 kgs for sparkling chain and 182 kgs for star magazine. Totally we stood at 1339 for the 9 months.
Okay. And sir, out of this, have you started delivering to Aditya Birla as well in this quarter, in Q3?
Yeah, already we have started delivering. Carrot we are delivering monthly 20 kgs and so Aditya Birla already we got order of last quarter only of 20 kgs and this quarter we will be already we have started delivering the products. So this quarter the numbers will come how much we are delivering this quarter to Aditya Birla.
So sir, in upcoming years like FY26 or FY27, how much do you expect to deliver to these two companies which are CaratLane and Aditya Birla?
So we now we are making monthly 450 kg per month with the subsidiaries. We are expecting 10% of revenue from more growth from CaratLane and Aditya Birla. So we are expecting monthly 50 kg from both CaratLane and Aditya Birla. This will add 100 kg extra production from our regular guidance. So in I think CaratLane we are on very track. Every month we are getting orders. Aditya Birla first order has already dispatched. So this quarter will be a trial basis and then we will get a regular order. So we are expecting to add next from April quarter 50 kg from both the companies.
Okay, so you said that 10% from both the companies you can deliver by FY26.
Yeah.
Okay. And sir, you don't have to take gold on your balance sheet, right? So it will be very capital
So we don't have to fund the data also and inventory also, because they provide us their bullion gold material to produce. We make them and we charge the making charge. So making charge will add on to the gross margins and sales. So we just make a bill of making charges, which will add directly to our gross margin.
Okay, so it will be like adding to your cash flow as well, and yeah, that's great.
We don't have to fund inventory also. So there's a good sign there if these are corporates are growing, giving us more productions.
And sir, any change in guidance after adding this customer for FY26 or FY27? Are you planning to, like you have guided for 6,300? Would you be changing that guidance?
Yeah, already we were at 6,300. Now we are guiding at 7,300 crores. As we are already reaching out of 3,300 crores, we have already done 2,500 crores. So we have changed our guidance to 7,200 crores because these are clients we have not counted in our guidance of 6,300 crores. So this new two clients already we added, and PN Gadgil also was not there. So we have revised our target to 7,200 crores by FY27.
Okay, that's great to know, sir. And sir, what would be your PAT margins on this 7,300 crore business?
So we are expecting from 3.5 to 4%, 3.5 to 4% in between that.
Okay. And sir, how is Q4 shaping up since 2 months are already done? If you could just give a directional update that would you be crossing this 447 kg mark? Would you be reaching 500 kg per month for Q4?
100% we are on track. We will not talk about the number of the ongoing quarters, but this quarter is much better than the December quarter.
Okay, sir, that's great to know. That's it. That's all from my side. Thank you for your answers and all the best for the future.
Thank you, sir.
Thank you. The next question comes from the line of Chintan Sheth from Giri Capital. Please go ahead.
Thank you for the opportunity. I missed your number on the standalone volume for 3Q and subsidiary volume for the third quarter.
So by number 730 crores we done from Skygold and subsidiary 135 crores and 134 crores. So together we said
998 crores. But no, I'm saying from 447 kg per month in third quarter, how much came from standalone and how much from the subsidiary?
Okay, volume wise 447 kgs. I can send you the. You can send me the mail. I will send you the details. Yeah, right now I'm not having the separate kgs with me.
Sure. Okay, no worries. And second is on the gold loan GML side. Where are we now? Last time we were at 25% of our loan converted to GML. Any progress, and what should we expect by the year end?
So we are expecting by March and 60%, 70%. We were expecting by December. We are little bit slower by 1 quarter because of some Karur Vysya Bank has closed their model, so we have to shift to ICICI Bank. SBI is also on the process. So we are like at 20-25% right now also. But we are, I think we are sure that we'll move by March quarter to at least 55-60%. So we are on track. Bankers have their system to change this all. They have to go to committees and change it. But little bit we are slow on this. We were expecting by December quarter. But let's see, we will be at 55-60% by March quarter.
Right. And if you can provide a split in terms of volumes, if you can provide, or revenue, whichever is available, the split between 22 karat, 18 karat, and the studded ones, if you can provide.
Yeah, so 18 karat we were at 3% last quarter, and now we have done 5% of this revenue in 18 karat.
Okay.
So the last quarter we sold diamond actual diamonds of 400 karat, 400 karat, and this quarter we have done 800 karat. I will give you the exact figure. So last quarter we approximately sold 400 carats. This quarter we sold 883 carats of diamonds. Last quarter we were at 37 kgs of 18 karat. This quarter we are at 49 kgs of 18 karat, which is a we were at 3% of the production. Now we are at 4-5% of the production. So 18 karat, as we told that we are concentrating on 18 karat rose gold and white gold jewelry, which is bringing us again margin to us. So we are more concentrating on 18 karat also, and natural diamond also. We doubled the carats in this quarter. So this is no segment we are concentrating. And one good news is that we already started lab gold diamond, and our first bill also shipped to Limelight Jewelry, which has 25 stores. So lab gold diamond also we shipped the first our production.
Okay. Got it. And lastly, on the guidance, you mentioned 7,200 crore by FY27. That implies that you will be almost utilizing or exhausting your existing capacities, right? Any broad plans for further expansion in capacity and how you will be funding it? Because so far right now, given that our working capital, our operating cash generation is still negative, and we were targeting somewhere turning positive in the upcoming year. If you can highlight how are you going to expand your capacities for future growth beyond FY27, and how you will be funding them?
So we have in mind that after FY27 March, we will need a huge facility as new clients are onboarded, big clients are onboarded. But as and when board will plan and will inform the exchange and will inform the exchange. So right now we are in the computer, but as and when required, we will be cost flow positive. We will be cash flow positive in 27. As you can see, the client onboarded are giving us the raw material by their own. So we don't have to fund that inventory. So we are adding those clients only. We are targeting Reliance also for that. And already Tanish is in pipeline, so we are targeting them also. So we are concentrating on those clients who are providing us raw material. So blendedly, we will be we're not requiring much capital to fund them, and we will be cash flow positive by 2027. After 27 March, we will need a huge facility. We have in mind, so we are preparing for that. But as and when board approves, we will inform the exchange.
Sure. All the very best, sir. Thank you, and all the very best.
Thank you. The next question comes from the line of Srinath Krishnan, an individual investor. Please go ahead.
Good morning, sir. The first question is on capacity expansion. This is a very large expansion that you're undertaking. What gives you the confidence that you would be able to utilize this capacity, maybe even in 4 or 5 years? This is like a 4 to 5x increase in capacity, right?
Sure. So you can see that this Carrot Lane now Carrot Lane now is planning for, I think, 300 more stores, as he has moved his subsidiary from Tanish to Tata. So earlier they were Tanish subsidiary, they were not able to keep all the 22 inventory because Tanish was keeping. So Carrot Lane now itself, the CEO from Tanish has came to Carrot Lane that they are planning to open 300 more stores in 2 years. So like that, Kalyan, Senko, Malabar Gold, Khazana Jewelry, all are planning aggressively in 2 years, 24 months. They are aggressively opening. One is opening 100 stores, somebody is opening 150 stores. So which they have opened, they have taken 7 to 8 years to open 80 stores. Now they are opening in 1 year. So they are into an aggressive plan, and we are in the mindset that after 2 years we will need a huge facility when we will have Tanish also, and I think major clients are onboarded. We are in talks with Reliance also. So the growth will come from this organized market, which is unorganized market is shifting to organized very much drastically. Earlier they were expecting to shift it by 2035. Now they are expecting that in 6 years only much of the higher percentage of the unorganized market will shift to organized, and it will come to 78%, which where they were expecting in 10 years. It will happen in 5 years only because of the stable government and BJP government and also policies they are taking. So we are expecting a huge growth in the stores opening. We have onboarded all the corporates right now in Dubai, Singapore also. We have distributors. We have appointed a distributor. So exports also growing very much. We are expecting lab grown diamond to grow very much in these 2 years. We need a good space now. We are producing a small space in Skygold only for lab grown, but we need a huge space for lab grown also. And 18 karat is accelerating very much for rose gold, white gold, and yellow gold. As the gold rates are going up, 18 carat market share will also go up.
Understood.
Keeping in mind that we are into all the segments, we have to plan a huge facility where this client will growing very aggressively, and we have to cope up with them. So we have in mind, let's see, we will, when, as and when we plan is on board, we will inform the exchange.
Sure. So the next one is, sir, is on the capital employed in the business. If you look at it, one effort you're taking is gold metal loan, and also importantly, the customers are going to give you reduce the capital employed.
Okay.
That is also a very large point, 50% of your capital. Yeah. Can you hear me now?
You can repeat the question? Yeah.
Yeah. So 50% of your, you're taking care of your gold bullion, right? Because the customers are going to give it to you.
Yeah.
Large portion of your capital employed, and the rest is receivable. So because reduction there will also significantly reduce the capital employed and improve the ROCs and cash flows. So what is the effort that you're taking there directionally? Where can we move towards in terms of receivable cycle from the 25 days we are at?
So 100% inventory days we are at 25 days, but debtor days we are at 25, 30 days. We will come down blendedly because we nowadays, whichever we are exhibiting yearly 4 times, and we are totally doing a cash and carry business with them. So we are now targeting, our Vice President Akash Tallesa joined us, he is totally targeting the customers who are giving the bullion advance, or we are doing the cash and carry business. So in 2 years span of time, we are expecting that this Carat Lane, Aditya Birla, Reliance, and if we are successful in onboarding Tanish also, so they will give only 50% of production of their bullion, and 50% out of 1,000 kg we have a capacity, 500 kg will be from their raw material, and 500 kg only we have to fund the data. So blendedly, automatically it will come down to 15 days or something. So only you can see we are concentrating on data there, and we are expecting it to come to 15 to 10 days because 50% business from right now is from here to FY 27 March. We are targeting 30% business should come from their raw material. We don't have to fund that raw material and data also. So blendedly it will come down.
Confirm, 130% of your business will come from people who are giving bullion, right? Yeah. And also exports will also be another 20-30%. What is the receivable cycle there?
Exports is again 10 to 15 days, is 7 days, 10 days. So it's much better than India. So their receivables is very fast from India. So blendedly exports also we are concentrating. We were at 1 or 2%. We are at now 8-9%, and we are targeting it to take it to 15%.
Okay. Both these put together will be nearly, something 30-40% of your revenue, which will have very low receivable cycle.
Yeah. So we are on track for that.
Oh, thank you.
Thank you. The next question comes from the line of Jehan Bhata from Nirmal Bang. Please go ahead.
Yeah. Sir, my question is on the borrowings front. So what are the current borrowings as on December?
So it's approximately 380 crores to call it approximately.
Okay. And any of the funds that we raised recently of 270 crores that are going to be used for working capital?
Yeah, so already we used 70 crore in subsidiaries and 140 crore in the subsidiary, both the subsidiaries, and out of the 130 crore, 100 crore was using Skygold and 30 crore for the general corporate expenses. So we have already infused here 18 carat and natural diamond and lab grown diamond. We have infused a new capital we increased, and there we infused in the star Mangalsutra and sparkling set. So all the division we have spreaded and invested. So we are seeing the growth in 18 carat also. We have grown from 3% to 5%. Then we have grown natural diamond also by 50% quarter and quarter.
Mm-hmm. Okay. And so, sir, how should we look at debt for by the end of this year and by end of next year? Where should the debt figure be?
So I think by the end of this year we are at 3,400 crore only. We are in a comfortable situation. And next year we can increase some 100 crore debt, not much than that, because we are getting GML right now. So it will be not hamper our interest cost will be lower because of GML. So already ICICI Bank has granted us 100 crore of GML. So we will be much of taking GML only, which will not impact our PAT margins. So
that I understood, sir. Yeah, but the gross debt will be how much?
Gross debt will be approximately next year. We are planning this year it is 400 crore, from 550 to 600 crore.
Okay. Thank you, sir.
Thank you. The next question comes from Raj Saraf from Finvestors. Please go ahead.
Sir, congratulations on great success on board.
Thank you.
Sir, how would be the margin outlook, sir, on EBITDA and the gross margin, sir? Will it sustain this level, or what could be the outlook, sir, for going forward, FY 26, FY 27?
We have worked very hard for the fancy jewelry, and we have improved our gross margin also, and EBITDA also increased. So we'll maintain this EBITDA for 5.5% approximately, and PAT margins for 3.5%. So we have improved, and we will maintain this in this 2 quarters also. So we are largely concentrating on the margin-based products, which are like 18 karat natural diamond. Lab grown also adding first shipment only gone for a small amount of 15 to 20 lakhs, but it's going to grow by, I think, out of our revenue, lab grown will have a place of 5% in next 3-4 quarters or 6 quarters. So I think blended margin will be at 7% and EBITDA at 5.5% and PAT at 3.5%.
Sir, and sir, you have given guidance for this year, 3,300 crores. If we maintain the same run rate for next quarter, we will be already crossing this number. So what could be the guidance for this year and FY 26? Though you have already given the guidance for FY 27, that is 72 or 200 crores, sir.
Yeah, so already we have guidance, given a guidance of 5,700. We have revised the guidance to 5,700 crore for the FY 26 and 7,200 for 27.
So for 26, sir, can you repeat again?
5,700 for FY 26 and 7,200 for FY 27.
Okay, sir. And this year you will maintain the guidance of 3,300 crore.
Yeah, 100%. So I think it will be better than that, but we'll not talk on the numbers. But this quarter is much better than it. Yeah.
Okay, sir. Okay. Thank you very much, sir. That's all from my side.
Thank you. Next question comes from the line of Manan Vandur from Walford PMS. Please go ahead.
Yes, thank you so much for the opportunity. So I had a few questions. First one would be that for the past few quarters we are seeing that...
Your voice is not coming properly. Can you...
Manan, may we request to use handset, please?
Hello, is it proper?
Yeah, now it's clear, I think.
Okay. So for the past few quarters, we are saying that we will onboard Tanishq. So where are we on that front?
So I think we are right now in a good position because we have supplied 2-3 times to the CaratLane, and CaratLane we have become a regular vendor to the CaratLane. It's not the first time we supplied 2-3 times more we supplied. So we are, and orders are coming back to back. So it will get very good impact in the Tanishq also, because board members meet every time and they discuss about the vendors, and there is a very good review about our company's product and selling time of our product. So it will help us to onboard Tanishq also. We are regularly meeting them. Already our Vice President Rakesh Sandesa is targeting them. Already we meet twice in last week also. But we are expecting, let's see, in 1 quarter we will be. But we are able to achieve Novel Jewels, Aditya Birla on board, then CaratLane. Now Tanishq is the only remaining part. So, but we are very nearby, I think.
Correct. Understood. So second will be, when did you say that we will be cash flow positive?
By FY 27 we will be cash flow positive.
Okay, understood. By FY 27. Okay. And so the next question was that when you spoke about the capex, I couldn't get it. So how much kgs per month are we planning the next capex, and what will be the total capacity after that?
So we are not anything on the plan, just have in the mind, but we are planning for it. So we will go up to 4-ton capacity. Now we are at 1-ton capacity. We will go up to 4-ton capacity, because by FY 27 March, after that we will reach the facility, and we will make now our competitor Amrali is at the capacity of, he is making 2-ton and he has a capacity of 2.5 to 3-ton. We want to make a 4-ton capacity facility, including all lab grown, natural, 18 karat and all. So let's see. We are planning for that, and as and when there is strong approved by the board, and we'll inform you. But we have in mind that we should have a facility of 4 ton per month.
4 ton per month. Okay, understood. And so the last question would be that last quarter, you said that we might have other income in Q3 of about 15 crores odd, but we had around something 7 crores. So will the balance 8 crore come in Q4? How can we look at that?
Which you can you repeat? Yeah.
Sir, last quarter con call we asked, so you said that for the quarter 3 we might get other income from sale of shares or something about 15 crores. But this quarter we had around 7 crores. So will the balance 8 crores come in quarter 4?
So you can see we have FDs against the bank limits collateral. So we are getting every quarter the interest income also. This year from sale of investment we got 3.4 crores. Some of our investments are with single bank or SBI. They're in the process. So I think if they get released in this quarter, we'll get income of other income also in this quarter. So some 35 crores of shares are lying with SBI. They are in the release process. If they'll get released, in that also we'll get but we already got in this quarter also 3.3 crore from the sales of investment and 2.4 crore from the interest income.
Okay, understood. And sir, last question will be, sir, I couldn't understand the debt part of it. You said that next year our debt will be around 550 to 600 crores. So
Yeah.
could you please explain a little that why will our debt increase? I couldn't get it.
So we are expanding in mini segment like 18 carat also, lab grown also, into natural diamond also 18 carat. So to fund the debt, so to fund the growth, we have to take the debt, and we are now getting GMS, so interest part will be only 3-4% yearly, other than 9% from the CC limits. So we are getting good orders from all the segments. I think lab grown, we have started one laminate jewelry which has 25 stores. Now bundle diamonds we are approaching who has 20 stores. So lab grown has a huge potential in next 2, 3, 4 quarters. So we'll fund that also. We'll fund 18 carat also. As and when required, we'll take the debt, but we are projecting it 550 to 600 crore. And we have revised the number also of the growth. To fund the growth, we'll take the debt here.
Correct. Okay, understood. And sir, very last question would be, sir, you said that FY27 we will be cash flow positive. So in terms of if I take cash flow by EBITDA, so what would be the conversion? Like more than 50%, or how would it be? For example, if it's just an example, EBITDA is for example 500 crores. So yeah, will our cash flow be more than 250 crores or something like that?
Yeah.
So it will be more than 50%, you are saying, our cash flow?
100%.
Okay, understood. Okay. Thank you so much. That's it.
Thank you. Next question comes from the line of Bharat Gianani from Money Control Pro. Please go ahead.
Yes, sir. Thank you for the opportunity and congratulations for a great set of numbers. So, sir, the first question is that on the natural diamond side and also on the especially on the lab grown diamond side, we have seen the price of the lab grown diamond correct very significantly in the last 2 years or so, and the prices are now stable. But then again, as the technology evolves, there is a risk that we may see a further price correction. So as a lab grown diamond manufacturer that you have started this segment, I know it is a very small portion right now, but then what is your risk in terms of if the price of the lab grown diamond continues to correct? So what risk do you have as a manufacturer of that? So if you can throw some light on that.
Sure. Thank you, Bharatji. So I will throw a light on that because lab grown is a devaluing asset. Every quarter rates are falling. Earlier it was falling drastically. Now it's falling in a limited. But as a manufacturer, all the whole industry works on that model only. We also procure that only order to the lab growing companies, that quantity only which we get the fixed order of that. So we didn't keep in the stock of this inventory. As we got an order of 500 carats, we ordered to the growing company. We do not grow inside because there is a big setup, and now we are very small in that. So as and when required, we grow inside also in 2027. But we take the inventory as which order is fixed. So retailer are also working on the same model. They are keeping a inventory of 300 carat, as they sold 50 carat in 1 week, they order 50 carat, as they sold 50 carat. So all industry is working on that model because all of them know that these rates are falling and will fall much ahead also. So all industry is working on the same model. Whichever order is there, we order the inventory and we dispatch. Once other order come, then we order. So in the same process, we do for the natural diamond also, because natural diamonds also and the small diamond rates are fall 10-15%, but solitaire, we don't keep solitaire jewelry, but solitaire also fall by 20-25%. But it's the same model in that also. Natural diamonds, we keep procure the diamonds as per the orders of the companies. So and when new rates come, we quote the new rates to the corporates, and then they approve for the new rates. So every quarter or 6 months we change the rate as in when rates fall. So we also procure on the same rate. So that's why we keep a limited order for a limited event. We don't keep in the inventory also.
Okay. So got it. So basically, as now what you're trying to say is that as the business model that you have now for the gold, once you receive the order, you fix the price and then start manufacturing. So that model will apply to the lab grown and natural diamond also.
Yeah. So as in when required, and when we are in a good position, we will grow inside also, because machineries are available to grow inside. So now quantity is very less, so we don't have to do capex any for lab grown diamond.
Okay. And sir, one more question from my side is, I missed your point. So you said that new clients that you are onboarding are giving you the raw material, for example, CaratLane or Vitabulla. So you gave some percentage, but I missed that number. So what percentage of the revenues that you have, the clients give you the raw material, and what that percentage will be going in next 2 years?
So in next 2 years, we are expecting 30-40% from this client will go in 1,000 kg, at least 300 to 350 kg should we get from this advanced bullion, and 650 kg from our inventory. Now we are getting per month 15 to 20 kg from CaratLane, and Aditya Birla just started in this month only. We get 5 to 10 kg per month. But coming 6 quarters, we are expecting after 6 quarters, we are expecting 30 to 35% business from this client. So out of 1,000 kg capacity, we are expecting 350 kg from this client and 650 kg from other.
Okay. So on an overall basis, in the next 2 years, you're saying that about 30 to 40% of the raw material will be provided by the client.
Yeah, we are expecting that.
Okay, sir. Thanks and all the best.
Thank you. Next question comes from the line of Amit Agicha from HG Hawa. Please go ahead.
Good morning, sir. Am I audible?
Yes, sir.
Thank you for the opportunity and congratulations for excellent set of numbers. My question was connected to exports, like how much of the total revenues from exports, and what is the company's exports revenue target for FY 26 and 27, and how is the demand shaping up in Middle East, UAE, Singapore, and Malaysia?
So already we are at 8% this quarter, 7% this quarter. 71 crore export we have done, and we were at 1-2% year before, and we in 2 years we are expecting it to take it to 13-14% or 15%. Majorly 85% we will rely on India only, because India has a huge potential. So UAE demand is stable and good. Singapore also we have appointed a distributor, so we will be starting delivering in this quarter. So UAE, Singapore, and Malaysia, decent growth is there, but India is very strong growth we are seeing. India is growing because unorganized market is big shifting to organized. So we are relying 80% on India, and this 8-9% we are expecting to go to 13, 14 or 15% by FY 27.
Thank you, sir. Last question was connected to the employee, like what initiatives are being placed to retain skilled artisans and karigars in the competitive market?
Pardon?
What initiatives are in place to retain these skilled artisans and karigars in the competitive market, like employees I'm talking about?
Sure. We are giving many incentives on base of their design, how design they are made and how it's working on the market. To design also artisans, although we have kept many project type incentives to them, how much production they are taking. So we are giving each and every facilities also there. We have made here gymnasium, saloons facility for them. So these are the basic facilities we are giving, and incentives also we are giving to them.
So you're going to increase the hiring in the coming quarters?
So already we were at 600 employees. Now we together subsidiary we are at 950 employees. So 950 employees are there together subsidiaries. We are at 950 employees. So we'll be hiring as and when every quarter we are hiring little bit where the Karigar level, not much designer are needed because designer and merchandising team we have, we will increase 10 by 10%. But at a worker level, the polish department finally we have to increase every quarter. So for doubling the production, we'll not need a double employees. We'll need 1/3 employee lesser because technologies are coming. We have already used US electro-polishing machine. Then 3D printers have came, which is reducing our manpower. So in few years, we are expecting that for doubling the production, we will not need to double the employees. We have to just 1/5 of the employees we have to hire.
Okay, that was helpful, sir, and all the best for the future. Thank you.
Thank you. Next question comes from Nilesh Jain from Astute Investment Management. Please go ahead.
Hi, thanks for the opportunity and congratulations on great earnings. My first question was on the GML side. Like you mentioned, by end of FY25, you're planning to target to bring it to 50 to 55%. So when I talk about for FY26, what percentage of overall debt, you would like to convert to GML, and then how much of that savings would, flow into your finance cost?
So we want to go up to 80%, 75 to 80%, and already it will help because we have already get a rating of A- from Fitch Rating. We were at BBB stable, now we are at A-, so there is a good sign. We have got a good rating, which will help us to reduce our finance cost in CC limits also and GML also, and reduce our collateral part also. So we want to go up to 70 to 80% GML, but by March we are expecting 50 to 55%.
Okay. So how much would that, flow into us as a finance cost? Right now it's around between 1 to 1.3%.
Yeah, it will help to improve by 0.5%. 0.5% will be improved. So 1.23% we are there. So it will come down to 0.7 or say 0.65.
Okay. My second question was, like increase your guidance to 70 to 100 crores by FY27. So does it include any new, clients which you plan to add, or it does take into account only your existing clients and then your two accounts which you added, which is CaratLane and Aditya Birla?
So we have increasing guidance on the basis of the existing client only because their showroom are increasing drastically. They have accelerated showrooms. Malabar Gold is opening 100 stores in a year. So we have this guidance revised this guidance on the basis of the existing customers only. Whichever other companies or CaratLane, they will give their own bullion. So in that our revenue will not increase, our gross margin will increase because we are making charge bill only will be made. They will give their bullion and we'll make from them. So in that our gross margin will improve, and so our revenue guidance will increase on the basis of the existing client only. Kalyan Jewellers, Senco Gold, Malabar Gold, Sangamail, then GRT Jewelry, Khazana. These all are growing drastically and opening their showroom. That's why we have revised our revenue guidance.
Okay, because I remember you mentioned that you were in a final agreement stages with Reliance. So say suppose you sign up by FY26, Tanishq and Reliance, both of them. So that would eventually increase your guidance, like on upside. Given right now you've not included.
In that kgs wise percentage will increase. Our kgs wise volume wise guidance will increase 100% because they will give their own bullion. That will help us to improve much in our gross margins.
Okay, so that is not taken into consideration. Okay.
No, I am not taking. We are not taking consideration in the guidance right now. Also, we are not taking much consideration of the CaratLane, also Aditya Birla, because they are in the initial stage. So after April quarter, we'll see and change the guidance of that also.
Okay. Okay. And my last question is, because right now with the new clients which you've added, you're trying to take the inventory directly from them. Are you in conversations with your existing client, to plan to change the model which you have right now, where you are taking inventory on your balance sheet, changing the model to taking inventory from them with your existing clients?
So we right now we are not planning because every corporate has their own model because some corporates work on this model, some corporates work on to fund inventory from ourselves also. So all they are large corporates, they have their own models. When we come to 30-40%, then we are in a position when we will talk to the existing corporate also to come to that model. But in this next 2 years, we'll first bring these clients on board and bring the volumes of 300-400 kgs from their bullion, and then only we can negotiate with these clients also. But every corporate has their own models to work, and so this Malabar Gold or Kalyan Jewellers, so they don't work on that model to give inventory to us, and then they are in the mindset that why they don't want to fund the inventory for 25 days, and they can open more stores and keep the inventory on their stores. So other mix of their models are there for the other corporates. But when we are at 30-40%, we are getting the bullion from this big corporate, then we can change our strategy, I think.
Right. Just last question, any inorganic acquisition or any companies which are looking to, have in mind to acquire them, just like you had acquired Star and Mangal, Star and Mangal both?
Nothing right now, but as and when required, as and when there will be any strong, we'll inform the board actions.
Okay, sure. Thank you and all the best.
Thank you. A reminder to all the participants, if you wish to register for a question, you may press star and 1 on your touchtone phone. Our next follow-up question comes from Palash Kawale from Nuvama Wealth. Please go ahead. Palash, sir, your line is unmuted. Please proceed with your question.
Yeah. Am I audible now?
Yes, Palash, tell me.
Yeah. So, sir, what was the inventory and debt position by the end of December?
End of this?
By the end of Q3?
Okay. So, I think I will send you the numbers with the finance team. Yeah.
Okay. No problem. Yeah. That's it from my side, sir. Thank you.
Thank you. The next question comes from the line of Shanmugan Selvanathan, an individual investor. Please go ahead.
Hello, sir. Congratulations on your excellent set of numbers in Q3.
Thank you, sir.
Yeah. I have just one question. Because of the rise in gold prices, currently we are facing the gold is at all-time high. Do you face any kind of impact in your demand from the current retail clients, or how is the wedding season currently going on, sir?
So wedding season is good. We are, as a manufacturer, we are backed by order every month because there is every wedding season. Then Akshay Tritiya comes in April, falls into March. Orders will come for Akshay Tritiya. Now we are making for wedding season. At retail level, there is 10-15% of impact is there for a short term of 10 to 15 days. But I think nowadays, as and when gold rates go, youngsters want to buy the gold as they presume that gold will go to 1 lakh or something. There is an assumption in the market. So at the manufacturer level, because we are order back, so corporate has to give us orders. They have to prepare for other occasions coming forward. But retail level, there is an impact of 10 to 12%. But I think it's short. As we talk to the corporate, they are telling us the impact of 5 to 6 days or 7 days, and back to normal in 7 days.
Okay. So do you feel any, because of this, any impact in revenues in the current quarter or in the Q1?
No, nothing, because we are getting a good orders of 18 karat also because of the rate. 18 karat are coming, orders are coming much because 18 karat is a budgeted jewelry, and in that the rate impact is lesser because it comes in the budget. So some switches there in 18 karat. 18 karat orders are coming much in this quarter also. So again, we have good orders in lined up and we are packed up orders. So there's no impact on manufacturing level, but it's natural that when rate goes up, like 3-4 days impact comes in the retail of 10 to 15%, and it goes back back to the normal.
Okay. Thank you very much, sir. That's it.
Thank you. The next follow-up question comes from the line of Bharat Gianani from Money Control Pro. Please go ahead.
Yes, sir. Thanks for the opportunity. I just wanted to check on the margin guidance for FY 27 at gross EBITDA and net profit level.
So gross margins, we are expecting to be at 7%, EBITDA at 5.5% and 3.5% PAT.
So PAT, how much you said?
3.5%.
3.5%. Okay, okay. Okay, sir. Thanks a lot. That's all from me.
Thank you. The next follow-up question comes from Raj Saraf from Finvestors. Please go ahead.
Sir, thank you, sir. Sir, is there any difference in gross margin of export and domestic?
There is a difference of 0.5%, not much in UAE countries. It's similar to India, in Singapore, Malaysia. So 0.5% is better there. But of course, Europe and US is different gross margins are there, but we don't make products of US and Europe. It's totally different products. So our products match to UAE country and Singapore, Malaysia. So, but their business is much of cash and carry and less data. So that's the advantage. We can churn the inventory fast. But margins is a difference of 0.5%.
Okay. And sir, one request from my side, sir. Actually, the investor presentation which has been posted of conclusion of Q3, we got now so many fresh updates on this conference call. So it will be helpful if you can please post a new investor presentation with so much updates. It will be helpful, sir.
Sure, sir. We will plan it out and update in 7 days.
Yeah. Okay, sir. And sir, one thing, sir, the volume guidance which you have given for FY26, that was from 550 to 600 kg. So what could be the volume guidance for now, the updated volume guidance for FY26?
So we are expecting to 650 kg approximately, 650 to 700 kg. So as you told that we will update new PPT guidance also in this 7 days and in our actions also. So I think we are expecting to 650 kg.
Okay, so and for FY27 it will be beyond 1050 kg.
Yes.
Yeah. Okay. Thank you, sir. Thank you, sir, and congratulations, and I wish all the best for the future.
Thank you so much.
Thank you. Ladies and gentlemen, in the interest of time, this will be our last question. And I now hand the conference over to the management for closing comments.
Thank you everyone for joining us. I hope we have been able to answer all the queries. In case you have inquired any further details, you may please contact us or Orient Capital, our investment relationship partner. Thank you so much. Thank you for being a part of our Skygold journey. Thank you so much.
Thank you. On behalf of Orient Capital, that concludes this conference. Thank you for joining us. You may now disconnect your lines.